Good morning. Thanks for joining us today. We have Gary O'Connor, CEO of Moneta Porcupine, back to tell us about the exciting new acquisition that they announced. I believe it was last week or the week before, the Golden Bear assets from O3 Mining. Gary was with us, I believe, just before the holidays, so he'll provide a bit of an overview of Moneta for anyone that's new, as well as spend quite a bit of time talking about the new transaction. So thanks for joining us today, Gary.
Thank you, Deborah, and thank you everybody for taking the time to join this webinar and get an update on Moneta Porcupine Mines. We were recently on Adelaide just before the Christmas New Year period. We had just announced a major resource update and a large increase to our resources. And as Deborah mentioned, last week we actually announced an acquisition of the neighbouring and adjoining Golden Bear assets from O3 Mining. These are all of their Ontario assets. So we're pleased to now be able to bring this, show this to the general public and to the investors on the merits of this acquisition and how it will continue to grow Moneta Porcupine Mines as one of the largest, gold development companies in North America. Remember, we are listed on the TSX, the main board, under the ticker ME. Our focus is in Timmins and our focus is gold, and we are creating what will be, a major Canadian gold company. I will point out there are forward-looking statements in this presentation. Our new flagship asset, we've renamed it the Golden Tower Gold, the Tower Gold Project. It's a combination of our Golden Highway asset and the new acquisition from the Garrison Project from O3. The combined inventory of the two projects will be 4 million ounces indicated and 4.4 million ounces inferred, making it one of the largest undeveloped, gold projects in North America. We have recent PEAs completed on the Southwest deposit on our Golden Highway project, and O3 Mining in December completed a PEA on the Garrison project. So both projects show robust economics. The rationale, though, is together, their two adjoining projects have a lot of synergies. It saves a lot of capital costs and produces a much higher, NPV, and thus a significant value addition to our shareholders and creates a much larger project. So we're really happy to be working in unison with O3 Mining here to have created one of the largest undeveloped gold projects. The focus, of course, is still Timmins, and we're still focusing on growing our resources. We've started a 70,000 meter drill, what will be a 70,000 meter drill program. We're drilling 30,000 meters over this winter, which we are focused on increasing the size of our current resources. And upon conclusion of the acquisition, which is subject to shareholder vote, we'll be expanding that project to increase the resources for the combined new project. The new combined entity, the new Moneta, will include 8.4 million ounces of gold. We'll have over 70,000 hectares to explore in the Timmins camp, making us one of the largest landowners in the camp. Remember, this is Canada's most prolific gold mining camp. Both assets have had recent PEAs, although our open pits and our new discovery at Westaway have not been subject to an economic study. So we'll be looking to do that as we develop the project and complete the resource update, which is currently complete the drilling, which is currently underway. The partnership really gives us the potential for a much higher re-rating, significant, capital cost savings, and significant addition of value to our shareholders with a much greater scale project and significant optionality in how we go about developing these resources. This makes us much more attractive, to institutional shareholders. The proposed transaction will include issuing 30% of our stock to O3, so there'll be a 30% shareholder. This is pre-financing. We just announced a bought deal pre-financing just last week, and that is for $20 million with a 2.25 green shoe. The definitive share purchase agreement has been signed, and we will be acquiring all of the outstanding shares of Northern Gold, 100% owned subsidiary of O3 Mining. This is subject to shareholder approval. So we'll be having a meeting going forward and seeking the approval of our shareholders. Officers and directors of the company have already signed into vote in support, and that already includes 16% of the share ownership in the company. The new Moneta moving forward, there'll be 5 board members from Moneta Porcupine Mines, 2 nominated from O3 Mining. We'll have 1 mutually agreed to new director. And as mentioned, this will be subject to shareholder approval. The combined projects, which we're currently terming the Tower Gold Project, occur roughly 100 kilometres east of Timmins. They occur on Highway 101. This is a major regional highway. There's electricity, roads, trained workforce, all the services you need located locally. And we see this as a major, step forward in being able to acquire the adjacent properties. This gives us a significant land holding in the eastern portions of the Desta Porcupine Fault Zone. We also have a 50-50 JV with Kirkin Lake in there. So between the 3 land packages, we are now a significant landholder, and our land package is hosting significant resources. Remember, this is Ontario, Canada, one of the world's most safest mining jurisdictions. The combined company will have 12 gold projects along the Desta Porcupine. We will add 73% to our land package. There is no royalties or encumbrances on the current Moneta resources. There are royalties on the O3 Mining up to 2% with an average of 1.5% royalties. And the excellent economics have been shown in the recent PEAs done on both Southwest and Garrison. And of course, we have the 50-50 JV with Kirkin Lake. The new project will have 4 million ounces indicated, 4.4 million ounces inferred. There's excellent potential to expand that. We are drilling the extensions of our resources now. There will be results coming out over the next few weeks showing the resource expansion potential. And going forward, we'll highlight the expanded development options. This map shows the very close proximity of the open pit resources as defined by O3 Mining. It's 1.8 million ounces indicated, 1 million ounces inferred. Within the Golden Highway project, we have a total of 2.7 million ounces in open pit and 2.8 million ounces underground. These are all occur within, in and along second order structures along the Desta Porcupine Fault Zone. And we see significant, re-rating potential. Remember, this makes us one of the top undeveloped gold mining projects in North America. Our current shareholding outstanding shares at Moneta are 347 million shares. We have just over 7 million cash, and this is pre the current financing, the $20 million bought deal. Our share price today is about 38 cents. That puts us just over about $130 million market cap. However, that is still valuing at us less than $20 an ounce. We see significant upside in our valuation. Many of our loyal shareholders have participated in this bought deal, and we've added some, and it looks like we're going to add some significant new shareholders. Good institutional support who continue to support us and move this project forward and expand it. We have a very good, strong board, significant, skill set covering a number of facets required for a balanced board. Lots of experience here on discovering, developing, selling, and operating mines. Looking at the long section, along the project, this shows the open pits of Moneta and the open pits, the Garrison open pits. We can see also the underground material here at the new Westaway discovery, which came out last year. That is open to depth and along strike. We are drilling that now. The Southwest underground deposit, which had been subjected to a PEA, is also open along strike and in certain parts to depth. We are drilling that now. We have not modelled the low-grade near-surface mineralisation at Southwest. That is currently being modelled, so we have the potential to significantly increase the Windjammer South open pit. We are drilling out the gap zone between the two zone areas now to connect those. We also see significant mineralisation below and under the Garrison open pits, and we also see the potential to significantly increase the size of, notably the eastern Garrison pits. So a lot of that is just limited by drilling, and we're planning to drill those and expand those, later this year. Should point out that There's been no high-grade mineralisation as modelled on the Golden Highway project beneath the pits. This material shown outside the pits is not in the resource. This is mineralised material. So we'll be looking to upgrade that to resources and potentially drill out similar style mineralisation to our underground open pits. Lots of synergies here. We both have good working relations with the Wagasheek First Nations. Both have exploration agreements. They provide a number of services to both companies, and we'll look forward to maintaining that good relationship going forward. Remember, the project itself gives us a much larger footprint, much larger resource base, and thus lots of opportunities to benefit from that going forward. We see that the Garrison will operate as a starter pit for the development of the entire Tower Gold project. They have outcropping mineralisation, 1 million ounces at a grade of over 1 gram per tonne at very low strip ratio. We do require some pre-stripping on our open pits. We see the ability to be able to do that while we're operating the starter pit, and thus obtain maximum cash flow and payback of capital earlier, and thus significantly increase the value of the project. This map shows just a view of the open pits as currently envisaged, shows the underground resources here at Golden Highway Southwest. There's 1.8 million ounces there. There's a further 0.7 million ounces at the new Westaway discovery. Westaway is open. We are drilling that now, and we'll continue to grow that. And as mentioned, there is significant mineralisation outside the current pits at Garrison, which we'll be following up. And some of the smaller pits will be looking to expand with additional drilling. Remember, this all occurs within 5 kilometres of each other. There's a major highway running through here, roads connecting us, and electricity. So there's lots of synergies here in regards to developing the project and operating just one plant rather than developing 2 separate projects adjacent to each other. So lots of capital savings there, and adds greater value to the combined project. Quick summary of the resources. Remember, last December, we added the open pit resources, 2.7 million ounces at Golden Highway. We added the underground. This was a new discovery, the Westaway, for just under 700,000 ounces at 4.7 grams per tonne. With the addition of the O3 mining Garrison project, takes us to over 5.5 million ounces of underground resources, about 5.6, and about 2.8 million ounces of open pit resources, 2.8 million ounces of underground resources. We now envisage a much larger combined gold production, significantly above 200 ounces per year. We have a second underground discovery at Westaway, similar to our Southwest project, for which a PEA envisaged 80,000 ounces a year. We can now see possibly 150,000 ounces a year from underground. Remember, that was at a low cash cost, sub $600 an ounce, bulk mining scenario. We combine that with a larger open pit scenario where we're potentially producing anywhere from 200 to 300,000 ounces a year. We can easily now see 350 to 500,000 ounce production profile for the combined projects. We are currently drilling out the exploration potential. Our first step will be to define the entire gold endowment. We will then subject that to an updated PEA, which will point to the best plan forward to develop these and in what sequence, and we'll follow that next year going forward with follow-up drilling and potentially moving into a pre-feasibility should the PEA indicate that's the best option. Metallurgically, the ore for both projects is very similar recoveries, the same process flow sheet is required. So this is a good synergy for the projects, and that has all been factored into our internal, valuation of the combined assets. The industrial footprint, of course, is significantly lower, but also with adding high-grade underground resources, this production from those at over 4 grams per tonne will significantly decrease the size of the process plant compared to most open pit mining development scenarios. Blending the ore will significantly increase the grade, thus reduce the size of the tailings dam required, reduce the size of the processing plant, and reduce the size of the overall capital cost and fleet. Remember, we have that starter pit over 1 million ounces at a very low strip ratio that is outcropping. And we see that as the way to start our open pit development while we do the pre-stripping on ours, which are larger, that require that initial pre-strip. So we're looking to be cash flowing early in the development cycle. The Moneta remains, undervalued. We have a valuation now of sub $220 an ounce. Looking at all the core comparable companies in North America who are in similar, similar stage of development, their assets and ounces are valued significantly higher. So we still see a lot of room to re-rate our ounces. Remember, we're in the middle of Timmins, beside a highway. There's very little permitting risk and very little development risk, which cannot be said for some of our peer group. So we see a significant re-rating potential, and noting that with the addition of the adjoining project, these ounces will continue to grow in value. Looking at our current valuation, this is the new Moneta. So this would be the valuation after combining the two assets. You can see how significantly undervalued they are compared to the NPV. Again, the current valuation, we're actually about 38 cents now, but realistically at a $77 per ounce valuation, that would put our valuation, significantly above $1.50. So that's a 5 times increase. Again, lots of room to re-rate the company, and you may think we've gone up a lot in the last month. We're still significantly undervalued, and remember, we are continuing to grow our resources. With the addition of the Garrison Projects, this immediately leaps us to being the second largest, project in North America, development project, 8.4 total ounces. Remember, that number is growing. We are drilling out the extensions now. Westaway is open. Southwest is open. We have not modelled the open pit resources at Southwest. They will be included, in the this year upon completion of drilling. So we think we'll see that that total gold endowment continue to grow. And again, the valuation, significantly undervalued compared to our peer group, and we continue to see re-rating potential there for investors. Highlights of the transaction include, the transaction adds 1.8 million ounces indicated. It adds 1 million ounces inferred, so that's a significant increase in indicated resources. Creates a Timmins Gold Camp development company with 4 million ounces indicated, 4.4 million ounces inferred. I've mentioned the starter pit and the great economics addition that has to our development scenarios moving forward. The ounces were acquired at about $14 an ounce compared to a median of over 50, and the ounces were acquired for 0.15 of NAV. Again, a very sharp discount. The rationale for that and the rationale for O3 Mining entering into this is that, like us, they see the potential of a larger combined project having significantly higher valuation for in the market, and we'll be looking to re-rate the company along those lines. This slide shows an isometric view looking down along the Moneta Porcupine. We see the 55 deposit here. Remember, this is about a 10-kilometre strike length. There's only 5 kilometres between the deposits. We can see the open pits of Garrison, probably the starter pits here around Garcon, the 55 open pit, the Windjammer South open pit. Remember, these are both have not been drilled out. We have significant potential to infill these, lower the strip ratio, and add ounces into what are economic pits. Westaway significantly is wide open to the south. Southwest, 1.8 million ounces, also open and currently the subject of drilling. And we're looking to model that low-grade mineralisation at near surface adjacent to the Windjammer South deposit over Westaway. So significant potential here to grow those resources. We have been drilling to the east of Windjammer South. Those results will be coming out very soon, and those will determine whether we think we have the potential to continue to grow this deposit to the east towards the Garrison project. So lots of upside and lots of potential there to continue to grow this resource. The current plan is to continue to expand Westaway underground, continue to expand the Southwest underground, expand the Windjammer South open pit, as well as we have done some drilling on the down dip extensions of Discovery. So we'll see if that deposit continues to grow. And then we'll roll into an in-pit infill drilling of the 55 Windjammer South pits. Remember, this will reduce the strip, increase ounces, and improve the economics of what are already economic pits. We'll also be modelling that southwest near surface low grade material and adding that into running a pit run on that, doing new metallurgical test work on the new deposits, and updating the resources later in the year. With the expanded project, including the Garrison project, we see the potential to expand the starter pits, as mentioned, the smaller pits east of Garcon. We'll be expanding our pits as well, and that will be subject to the results pending on our exploration drilling. But we already see the potential both at 55 and Windjammer South to extend these pits, connect Windjammer South to Southwest, as well as expand and test and expand other targets. We have other targets, Discovery, Halfway, Eastfold. A lot of these results will be coming out in the coming months, as well as continue to extend that. The new discovery of Westaway, that's that high-grade new discovery we made last year, 700,000 ounces, as well as test the South Basin, which is wide open. And we remember we had some significant intercepts there last year on what is a new regional target. We also have defined some new targets, some of them in the Garrison project area. Bofonta Gold Pike have significant underground high-grade resources to follow up, as we have the Twin Creeks, also some significant high-grade intercepts there which have been intersected historically. We'd look at expanding the PEA, doing a much larger PEA and having a much larger, production profile moving forward. And that would be at the completion of, an additional 40,000 meters drilling. We've just raised the money for that. And so we're looking at a much bigger, scale drilling program, much significantly larger project moving forward. Milestones moving forward include the combination of the completion of the combination to form the new Moneta. At the same time, we'll be continuing to drill. We're doing that 30,000 meter drill program now. That will be expanded to another 40,000 upon completion of the transaction. Remember, we have already raised this money. It was done in a bought deal. Second half of the project we'll be looking at updating the PEA, significantly larger production profile, doing the required metallurgical test work along the way. Rolling into next year, we already are in the process of we raising those funds. They're part of the bought deal for another significant drill program next year to continue to expand the resource. And that stage we'll be looking at whether we roll into pre-feasibility and thus start, infill drilling and the pre-feasibility studies required to move this forward. We'll be well positioned to capitalise on, a re-rating to show the market the new valuation, a potential valuation of the company, and we'll be looking to continue to grow those resources and thus, add more value to the company. So on that note, I'll hand it over to questions, and if anybody has any questions or queries, please go ahead.
Yeah, I have a question for you, Gary. So when you talk about putting out an updated resource next year, I believe you said it was, are you looking at expanding overall resources or moving categories?
The focus is on expanding resources at this stage. You upgrade the categories as part of a pre-feasibility study that at a scoping level, you drill out to an inferred category. You want to see your entire gold endowment first before, spending drill money on upgrading resources.
Okay.
And the resource updates will be done this year. Yeah, we'll be updating those resources this year.
Okay, so right now you're sitting at 8.2 million ounces, and we can expect to see an increase to that through drilling over the next year or two?
That's right, 8.4 million ounces, and we expect to continue to grow that. We have some very low-hanging fruit here. The southwest low-grade mineralization, this has actually all been drilled out except for a small, area here between Westaway and Southwest. We're drilling that now. We have rigs in there now, and we're modelling that up. So we expect that pit to significantly grow and thus capture a lot of the near-surface lower-grade ounces. And remember, Westaway was wide open. The last drill hole we did at Westaway last year, hole 150 to the south, it had an intercept of 30 metres at 3 grams, including 12 metres at 5.5 grams. That hole is wide open, has not been drilled above, below, or along strike. And remember, we have the material, the one drill hole on the South Basin that had, there was a 1 ounce intercept there. there's going to be no follow-up of that. We see that connecting to the Westaway deposit to the north. So we'll be in there drilling that over the next 3 months.
Okay. And you have to excuse my ignorance. I'm a generalist, not just a mining person. But
no problem.
When you talk about potential takeover targets and things like that in the mining sector, specifically with gold, people always talk about a 5 million ounce sort of target. That's when the majors would potentially start looking at an acquisition. You're well beyond that. So can you talk to us a little bit about what your strategy is? Do you want to get to 10 million ounces? Do you think that makes you more attractive to like a really large gold company, or what's the plan?
Look, our focus and really what we should be doing is determining the entire gold endowment here. We're at 8.4. We can see it growing considerably with our immediate targets. There are a number of targets we've been drilling this year, which are exploration style, though the results of those will determine how much more we can grow over at the current potential we see. But yeah, our role and purpose in this company is to show the entire gold endowment, and then to put a plan together to develop and to develop it in the most efficient manner and for the best value of the project. So there was always the magic 2 numbers. That was a target a lot of companies used, at least 200,000 ounces production per year, 2 million ounces, and 2 grams per ton, notably for underground resources. I know some of the larger companies now look at the magic 5 number, at least 500,000 ounces production a year potential and 5 million ounces. We're of course well north of that already, and looking to expand that, probably double that number, to be quite honest. But yeah, those are conceptual targets, because let's say some of the larger companies to move their dial and show a significant value add, they really need to be looking at something that's up towards 3, 4, 500,000 ounces production a year, and we see ourselves now falling in that camp.
Okay, and so the intention would be to develop the assets or potentially sell it, whichever maximizes shareholder value down the road. Develop them.
Yeah, our role at the moment is to continue to develop this. There's no for sale sign up where we have the ability to fund this. Our shareholders are supporting us and raising the funds to continue to grow this. We'll continue to add value to our shareholders. We're still significantly undervalued, so I think for us to be a takeover target at this time would be a disservice to our shareholders. So we're going to continue to grow this and continue to add value and re-rate this, with a good, IR program, and we are a public company. So if sometime in the future, someone does potentially take us, well, that's up to the market. But at this stage, our job is to de-risk this, expand it, do the correct, the work programs, the correct work programs to develop this and move it forward and add value, and that de-risks and adds more, per ounce value. So we'll continue to do that, and at the right time, we'll bring in the right team to move this forward into production. And so, we'll do the right things when they're required, to continue to add value and move this forward.
Okay. And talking about valuation, I have a couple questions just asking, how do you close that valuation gap, and what are your plans around that? And I will point out that the last time I looked at a peer group average, I had it calculated at like $35 to $40 an ounce. So you're about half that. So, in a safe jurisdiction, one can assume that you'll be at the top end of that range eventually. So how do you plan to maximize value and close that gap for shareholders?
It's mostly just getting the story out there and bringing it to the eyes of investors and getting more eyes on it. Remember, this has all happened very quickly. We only put that new resource out in December. We've only just, announced the acquisition. So we've gone essentially from 2.1 million ounces to 5.5 and now 5.5 to 8.4. That's all happened really just in a month. So the market is catching up. You can see, our share price has been essentially going up every day for the last month. we've essentially trebled. We think there's still lots of upside. If you look at a number of our peer group here, similar things happened to them early in their development life. They, initially they were well undervalued. It wasn't until the market, got their eyes on it and then realized the potential that, over time they get revalued, and we can see that already happening. And we have a big program in place, including the likes of this webcast today. This is just part of getting our project in front of the right eyes and the investors and those who will see the value moving forward. And we're confident we can deliver value to investors.
Okay, thank you. So going back to the map of the different projects, do you have the intention to consolidate or connect the claims together?
Yes, we have been in some discussions about acquiring some of the other claims over the last 2 years. We have been picking up other blocks. If you look back in our disclosure, we have picked up some other claims to join. Remember, we are already in this joint venture, so we own all this hatch land. Well, we own 50% of it, so we do have some of the upside potential. Striking, shouldn't say upside. There's striking potential to the east. So we'll be looking at acquiring some of the others as well, should it be possible. At this stage, there's been no drilling done in there, so we don't know if there is mineralisation. There are no resources there, so there's nothing obvious. But it does point to that has been prospective ground.
And who holds the claims in between the two projects?
It's mostly Kirk and Lake Gold, who is our joint venture partner here in this joint venture. So they own a lot of ground in the area, and we'll see what possibilities are available there for potential ground swaps or something that adds value to both of us.
Mm-hmm. And who else is in the region?
Other companies in the region, just to our west is McEwen Mining. So they operate the Black Fox mine. They haul that to stock. It's processed there. So they've got Black Fox, Grey Fox. It's mostly between us. It's mostly Kirk and Lake Gold. Other Gold Corp. Newmont has some land up in here as well. Kirk and Lake is also just to the east of us in the Holt Holloway area. Newmont has a lot of the ground around Timmins, as does Pan American Silver. And I understand there's Mayfair has acquired the Fen Gib, which occurs to the west of us, about 30 kilometres west in this area. But they're the main players in the belt.
Okay, and I had a question just asking, with the current drill programs that you have planned, or the ones that you mentioned earlier, how many ounces do you think you can add? Can you give us a target? Are you guiding to anything?
Well, that's a hard one. Yeah, it's a hard one to ask. But look, we can see the ability to add significant open pit resources here at Southwest. If you just look at the strike length, it has similar tenure to Windjammer South. We see the ability to add ounces to 55, Westaway. Yeah, we can see the ability to get to that, that 10 number, I think, moving forward here, drilling these obvious targets out.
Okay. And then I have some questions about timelines to production and that sort of thing. So specifically, when will production at scale begin post the PEA feasibility work? Are you looking as early as 2022?
With this year, 2021 is all about adding resources, drilling out the resources, and then updating the PEA. So that will sort of define the development plan going forward. At that point, it will point us to whether we roll straight into a pre-feasibility. So we potentially, if we don't continue to see upside potential to continue to grow this project, we could see the ability to go into pre-feasibility next year, feasibility 2022, and then you're probably a 2-year timeline, permitting, detailed engineering. So you're probably looking at a 2024, production startup if we move along that timeline. If it looks like we're continuing to grow this after this drill program, and this is going to be something significantly bigger than the numbers we just talked about, then that may push us back another year to do another round of drilling, update the PEA, and thus scope out a significantly larger project.
Okay. And I know it's probably a little premature to be talking about what production would look like, et cetera. I just wanted to clarify one point you made earlier in the presentation about the combination of projects. I believe you said that it decreases the size of the plant required, but I think you meant to say it increases the size of the plant required. Can you talk a little bit more about that?
Yeah, that reference was in regards to blending with higher grade underground ore. So if you're blending 4 gram per tons with 1 gram per ton to produce the same amount of ore, you need a significantly smaller plant than if you're just producing from 1 gram per ton ore. So that there's significant cost savings in, blending higher grade material with lower grade. So that reference was in regards to potentially having 2 underground mining operations. We've already got a PEA wrapped around Southwest that shows very good sub $600 per ounce costs. This is bulk mining. Remember these were stopes, 8 meter wide stopes, big wide stopes, bulk mining scenario, good cheap mining per ounces. We see a very similar style of mineralization. We've got veins at Westaway up to 30 meters wide. So these will be big wide stopes. We're drilling out the extensions of that. There's 700,000 ounces already, but we see the ability now of 2 underground operations, potentially 150,000 ounces from the combined. This is at very low production costs at about 4 grams per ton. We blend that with a large open pit at running about a gram per ton. You end up with a weight average, depending on the throughput, anything from, 1.4 to 1.8 grams per ton. Mining at those scales, and, the PEA at Garrison looked at 4 million tonne per annum. That was just over 100,000 ounces a year production. We now see the ability with the size of our pits. Remember, we have 2.7 million ounces in our pits now, and that will grow. Southwest will add significantly, and the exploration will determine if we can grow it to the east. But you can easily be doing 200,000 ounces a year, so 8 million tonne per annum, through open pits, combining that with 1.6 million tonne from underground, so you're just under 10 million tonne per annum. But that would be at a grade of 1.4, I think it is the weight average grade. So that the plant for that, and that's we're looking at 350,000 ounces minimum production there, would be significantly smaller and thus lower capital than a 350,000 ounce plant required for a 1 gram open pit.
Okay, that's quite a lot of production. Can you put that in a frame of reference? Like what mine can you reference that's producing that? It's in a safe jurisdiction like Canada?
Oh, well, places like Detour, Malartic, just across the border. Detour is just north of us. They're both producing up to, roughly 400, 500,000 ounces a year. And that's just from an open pit. So they don't currently have the ability to blend higher grade ore. But I see there's been a recent study done at Malartic for an underground operation to blend their ore. Also, the Detour operations also drilling out a higher grade portion. So they're looking to blend, high grade. If you look at the Newmont operation in Timmins, so Newmont is currently mining from the Hollinger pit at about a 1 gram per ton. They are blending that ore, the dome, and they're hauling that to the dome pit. That is a fairly high strip ratio, but they're augmenting that with underground high-grade material from the Hoyle Pond underground mine, as well as the Borden Lake mine, 200 kilometres to the south. So they blend, 1 gram with, 5-6 gram material, and that's an 8 million tonne per annum pit processing plant. So they're producing just under that target we're looking at. But so mines in the area are already doing that. That's what Newmont does here at the Dome, and mines ore from Hollinger, Hoyle Pond and Borden Lake. Other big mining operations do the same. Look at the Grassberg operation at Freeport. So they have a large open pit there, Grassberg, but they supplement that with underground material from, Gunung Biji Timor and GBT. So it's a very common thing to be done. It really doesn't decrease your capital costs, and you can produce significantly more, ounces from the same size plant.
Okay. Interesting. So I have a couple questions on your capital structure and shareholder base. So maybe if you want to pull that slide up, while I ask you the questions. The first is, when will the 6-to-1 share consolidation occur? And they're asking, how will the company maintain its market cap after that? I guess it's asking about, oftentimes when companies consolidate their shares, you see that creep back to the original share price, which is much lower. But I'll let you answer it, and then I have some comments.
Yeah, no problem. We've actually done a lot of work on this. So our CFO, Jason McIntosh, has done a significant amount of work on looking at this, and as well as our financial advisors. The current shares, 347 million, is for the current company. We are doing a $20 million bought deal, and then we will do the acquisition. The 30% share, so that's just under 150 million shares will be issued to O3 Mining. So at that point, we'll have a much bigger, outstanding share count. We looked at, what's required for margining the shares. We looked at precedent transactions, what share price, liquidity, how many shares we came up. We came up with a magic number of 6-to-1. That'll put us at just under 100 million shares. Our share price, well, it'll be in that sort of $180, $90 range. Companies in that range actually perform well. It still has enough liquidity to get, good retail support, but it's not too tightly held to stop that liquidity. And it's not too highly priced that, scares away, more of your retail group. So we think that's the sweet spot, and that's what we're aiming for. And as mentioned, most companies in that range have performed well after a share rollback. And it being at that price, it gives us the ability to be able to look at things like a New York Stock Exchange listing, London listing, and that also reaches out to a much significant and wider shareholder base who currently would not look at this company. Having that share price at that height also attracts significant, institutional and investors who would currently not be, would not be looking at Moneta Porcupine with the share price we're at and the number of shares out. So yeah, it gives us that right balance of liquidity, share prices, and thus performance. So we think it'll be very well received, and it as mentioned, it will be attracted. Will attract a much wider investor base,
and it'll make you marginable as well.
Exactly. That's yeah.
Okay. And from my experience, usually when you do a share rollback in conjunction with a transaction or with a big catalyst, you don't have the same share creep down.
No, correct. This had been discussed before, the possibility of a rollback with a number of shares out, but I'd always said we'll only do it when we do have a major, corporate, transaction. We have that now. We're going from 5.5 million ounces to 8.4. We've catapulted into being one of the largest undeveloped, gold projects in North America. So that's, really does put us in a different, a different bracket. And we've got a lot of good investors now supporting us. So we think we'll continue to get that support in the market, and we won't see a drift back.
And talking about your investor base, so post-closing, O3 will own, I believe you said 30% of the company. Is that correct?
That's right. So pre-financing, but post-transaction. So the financing is on top of that. So it's 70% O3 and 70% current Moneta shareholders.
And there's no intention to do a secondary or anything for them as part of the financing?
There is a sub-receipt as part of that, the $3 million, but the other 17 plus the 2.2 million green shoe is not conditional on closing that deal.
Okay, got it. And do you know what their intention with that position is? Will they hold it long term? Will they?
Yes. So part of the share purchase agreement, there are tie-up, provisions in there, so that does restrict them from selling for a significant period of time, like over 24 months, and then of course there's there's provisions in there in regards to when and how they can sell. Remember, for them though, they're a long-term. They're not doing this as an investment. They're long-term resource development people. They'll have people on the board. They see this as being part of being a shareholder in a much more significant resource, development. They're now, part of what will be, one of the biggest gold development stories in Canada and North America, and they want to be there. They don't see this as an investment. That's not their role, and they will ultimately get significantly better value for their shareholders by keeping that investment rather than selling it anyway.
Got it. And you've got a number of partnerships, but do you actually have any other corporate shareholders?
We do not. No, okay. It's all institutional or retail.
Okay. And then I had one final question from the audience, which is, when will you start your permitting process?
Well, in a way, we have already started it. We are doing it. We have been doing our environmental baseline now for over a year. O3 Mining was also doing environmental baseline work. We both incidentally use the same company, so we'll mesh those programs. So that process has already started. We've already engaged the First Nations. We have, exploration agreements that lines us up for, community engagement requirements for permitting. So both of us are already well down that track and, doing the groundwork. Once we have a plan for development, you need to have an actual plan of what you're going to develop to actually start the actual permitting. That could be after the PEA or the early in the pre-feasibility stage. Then we could start, the actual official permitting process. But we've already started the data collection and the baseline data that we need to do that permitting.
Great. I don't see any other questions, so I think we can wrap it up here. Congratulations. It's been quite a couple months for you. I think the first time we were introduced over email and, we're talking about doing the first webinar, you had 2.7 million ounces.
2.1, I think it was actually.
And then the next time I saw you had 5, and now you have 8. So next time we talk, I'll expect to see 10.
Exactly. See, you've given it the good Midas touch there. So we'd better stay close, because every time we plan another webinar, we add 2 or 3 million ounces. So
yeah, I think
let's keep this up. Exactly.
But yeah, congratulations. I mean, it's been impressive what you've been able to do in terms of growth organically and inorganically over the winters. So congrats. I wish you success on closing the deal. It sounds like it's pretty locked up there. But yeah, I look forward to seeing you as your drill programs advance and you move through your PEA and hopefully towards production in 2024 or a little bit later. But maybe you can summarize sort of what you think the biggest selling features right now for Moneta Porcupine are.
Well, I think the biggest selling feature now is just its increased resource growth. We will be adding the Garrison project. We'll be drilling this year. Well, we're already drilling. We're expanding our resources. We're adding some of the adjacent, both open pit resources and expanding our underground resources. We've just tested some regional targets. Those results will determine whether in the second half of this year we do follow up and continue to drill out more resources. We'll conclude this transaction. We'll include all of the the O3 Mining assets in with ours. We already see the ability to add some ounces there, drill out some extensions. So this year is all about more ounces, bigger project, and of course going forward. And we've done a lot of these studies internal. There's significant economic upside in the two combined projects. So the next PEA will show a significantly larger, production profile, and with lots of, cost savings and synergies from the two projects, which, significantly add to the NPV. And so that new PEA will be, a significantly larger, have significantly larger monetary value than the two, single PEAs we did last year. So it'll be a much larger, much more dynamic project. And we think that's going to be, provide significant, valuation to our shareholders moving forward.
Great. Well, stock's been trading well recently. I think it's up nearly 30% in the past week. You're having a decent day today. I'd like to see it with a 4 handle later this week if possible.
Well, we hope so too.
Anyway, thank you for taking the time to clarify a few points. I think it's a really interesting story, and I'm looking forward to seeing the news flow.
Excellent. Thank you, Deborah, and thank you everybody for attending the webinar. Much appreciated.